We're bringing in now Angelo Zino for more reaction on Alphabet. He, of course, is senior equity analyst at CFRA Research. Angelo, it's good to see you. So Alphabet reports the stock's kind of all over the place here in the after hours. Angelo, we dipped initially. Now we're actually up by about 1%. Get your reaction, your response to these numbers.
Yeah, listen, Josh, I think overall the results were solid is, I guess, the best way I can put it, right? I mean, I think investors in recent quarters have kind of been hoping or looking for kind of these nice beat and raises out of some of these big tech names. This one was kind of more of an inline type quarter, especially after, Google posted some great results after Q1 results. But that said, stronger than expected numbers in terms of the search business. That kind of offsets some softness on the YouTube side of things, but YouTube still is growing at a healthy double-digit pace nonetheless. And then on the cloud side of things, definitely beat our expectations for growth of about 25% or so. So, overall, when you kind of look at on a kind of operating segment perspective, some mixed results there, at least relative to expectations. But nonetheless, I would kind of call it very solid. And then when we kind of look at the margin side of things, I think that's really an underappreciated story as far as kind of Alphabet is concerned. They posted operating margins, I believe, about 32% or so, kind of the highest level they've had since kind of since the kind of the pandemic levels. And especially on the cloud side of things, I think the operating margin number was 11%, which is the highest number we've seen actually from that segment. So they're doing a pretty good job on that side of things, scaling the business, benefiting from kind of the clearly the higher revenue and kind of sustaining some of those OpEx numbers.
Angelo, to get back to YouTube ads for just a minute, and I know this is a relatively small part of the overall revenue pie, but why do you think that was a little bit weaker than anticipated?
I think it's possibly that some analysts out there might have gotten a little bit kind of overly optimistic after kind of YouTube's strong beat after Q1 results. They grew north of 20%. That was really kind of a peak year-over-year type number on the YouTube side of things. Digital ad spend continues to be very healthy. You kind of look at how they're monetizing that business overall. It continues to be, we think there are a lot of kind of opportunities for them to monetize, specifically kind of some of those shorter form videos, which they're finding some success on here as of late. But again, the numbers from the growth perspective for YouTube look pretty good. They're also lapping, some price increases and stuff like that on kind of the NFL Sunday ticket package. So, it might be a combination of issues out there, but nonetheless, the numbers overall were still pretty strong for YouTube.
What about the moves, Angelo, this company's making in AI? Just as a financial analyst, how are you thinking through that? How excited should investors be about that?
Yeah, so as far as AI is concerned, listen, it's pretty incremental at this point in time, right? I mean, you're not necessarily seeing this massive pivot in terms of AI at this point in time, in terms of monetizing AI. But you're seeing kind of some fruits from their investments out there, specifically on the cloud side of things, as they kind of get more of that capacity online in terms of those GPUs and the next gen CPUs out there. So you're seeing it kind of, support better than expected numbers on the cloud side of things. And then specifically as we kind of start looking on the search and YouTube businesses, clearly they're starting to implement AI across those segments out there. I think AI overviews, specifically is something that analysts are going to kind of want to see, how that's coming along here, since that was really kind of just launched on a widespread perspective here in Q2. So we kind of want to see, what they have to say about kind of the ROI out there as from the perspective of advertisers and how they're monetizing that, at least here initially.
Angelo, I want to ask you about Wiz for a minute, right? The reports here that the talks between the two companies have ended, at least for now. The market didn't seem to react that much one way or the other to the news that deal might be possible. Do you think they're going to address that on the call? Do you think they'll be asked about it? And what's your view of that potential deal or lack thereof?
Yeah, they may get asked about it. I mean, listen, I think cybersecurity is kind of a huge growth opportunity out there, specifically on the cloud side of things. So no surprise that Alphabet was kind of looking into it and hoping to kind of make a deal like this. Why Wiz kind of walked away from this, kind of given the valuation that they were offered by Alphabet, who knows, to be sure. It probably has something to do with the tougher regulatory environment out there, if I had to kind of guess, because they'd have to be kind of be sitting out there potentially for a while to see whether or not that deal would even kind of go through, right? So, I think there's a little bit of concern out there from, whether it be from the big tech guys out there or even from potential companies that could be acquired out there about the regulatory landscape. So, it's not something that kind of has necessarily an impact on how we're looking at the stock over the next 12 to 18 months. But I think kind of if this deal could have gotten done, it definitely would have been a kind of nice incremental growth opportunity for that cloud business.
Angela, final question here. There is a new CFO, right? Anat Ashkenazi. I'm just curious what changes, Angelo, you would like to see or expect to see. Would you appreciate more disclosures, for example?
Listen, I think personally, as an analyst, I'd love to see them get a little bit more aggressive on the buyback side of things for Alphabet. I mean, you kind of look at the balance sheet that this company's got, by far the largest net cash position among kind of the Mag 7 names and any company out there on the planet for that matter. So personally, this is a company that I think continues to be extremely undervalued, trading less than 18 times on a net cash basis on our 2026 estimates. So, whether you're an investor right now out there or whether you're kind of Alphabet themselves, I'd love to I continue to think that this is an attractive opportunity here to potentially get a little bit more aggressive on buybacks. You're probably not going to see anything along those lines even kind of get announced until kind of, they report in April of next year. But that said, that would be personally what I'd like to see a little bit more of from, their CFO.